2025 is about to be here. Let's talk about it on Today in Mortgages. Hey, what's up, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgages. Rich, we're getting close. 2025. We're going to get to say bye to 2024. How you feel about that?
I feel great about it. Just to get on to a new year, I'm really looking forward to 2025.
I think there's a lot to look forward to, a lot of change in the air, some of the crazy things happening just in the last 24 hours. You know, we had a rate cut yesterday. The House scrapped a spending bill. So things are up in the air, a lot of unknowns, but I think a lot to be excited about as well. I think a lot of people are feeling like any change is good change right now. So let's talk a little bit about 2025. We pulled an article today. It's from mortgagereports.com that looks at some 2025 predictions. These are pretty broad, but I just want to get your take on some things. And so let's dig into it. The article is 2024 Housing Market, Key Takeaways, and What Lies Ahead. So, Rich, the first thing we're talking about today is just some of the factors that played into the economy and the housing market in 2024 and how those factors may or may not change in 2025. So first, let's talk about prices and inventory. Rich, we all know what's been happening with that. Give us a quick primer and also what we might be looking forward to in 2025.
Home prices rise because not enough inventory. That's kind of summarizing it. What we're going to get out of this coverage of this article is basically a summary of what you and I have been talking about pretty much all year. And it's nice to see at least what we were talking about is actually happened. So, home prices rise, inventory still low because you got a lock-in effect for a lot of existing homeowners that just can't possibly move and save any kind of money, even if they're downsizing. So, a lot of interesting things.
Yeah, Rich, I would say this is probably the one that's the most immovable in the short term. Obviously, we can create policy to open up the opportunities for inventory, new home building, that kind of thing. But those are the type of things that take quite a bit of time to actually kind of play out in the market. It's not like you can change the rules and build new houses tomorrow. Those things just take time. So what's our thoughts on, what that looks like going into 2025?
More of it. I mean, they expect more homes to be sold in 2025, up anywhere from, I think it said 2% to 9% increase in homes sold in 2025. Plus, remember, Redfin announced they expect a 4% home price growth. So, more homes sold at a higher amount.
Yeah, that's good for us and hopefully good for buyers out there that can find stuff on the market in that inventory. So we'll see what happens. Hey, Rich, the second factor that they talk about here is just the general economy. And so obviously parts of the economy are really good right now. Stock market's at record highs, but people are feeling the pinch on their day-to-day and in their wallets. So let's talk about the economy. Let's just look forward to 2025 because we've all experienced enough of the economy in 2024. So what are our thoughts on that?
Well, I mean, if you're just going to pull from Jay Powell's speech yesterday and his press conference, he sees things as pretty darn strong. The economy, while the labor market is cooling a little bit, you still have a very high participation rate. You still have a relatively low unemployment rate. And the economy is expected to continue to be strong. Now, there's a lot of factors ahead, right? We have a new administration moving in, Michael. That new administration has talked about tariffs and a lot of different things which are inflationary, tax cuts. Look at what we got a standoff in Congress again on a continuing resolution to keep the government open. So based on yesterday, it's likely that we're going to see the government close this Friday. And or that's tomorrow. So close this weekend and who knows when it'll open back up. So we'll see, but there's a lot of things ahead, a lot of tripwires that can get in the way. But, the thing that doesn't change, Michael, is families grow and people get different jobs and have to move and sell and buy. So homes are still going to be sold. Like we mentioned earlier, they expect 4.5 million homes to be sold in 2025, which is more than what sold this year. So good stuff.
Yeah, Rich, and I think, interestingly, what we've seen kind of coming through the post-COVID era where, rates rose really fast. We were afraid of some sort of recession. Really, it seems like a lot of the economy was driven by feelings and whether or not the people felt like that they could look forward to being able to pay for things in the future. And so spending just kept happening at the consumer level. And I mean, this is not in the data, but Rich, what's your personal feeling about just kind of the general sentiment of people going into 2025? Like, you feel like the market's more hopeful? Do you feel like buyers maybe will come back to the table because of that? Or are we looking at the opposite?
Jeez, it's still early to tell, right? We're just coming off of an election where
Hmm.
that really drove this election. People feeling like the pressure's too high. I just need some change. I'll vote for anybody that's promising me, lower prices. I mean, that's what they were both doing. But, Trump just does a better job. He's a marketing genius. So, let's see what gets produced. I'm hopeful. Listen, we need some regulation changes.
Rich, the last thing we're talking about here is rates. So obviously, rates play a huge factor into everything that we've been dealing with. Yesterday, the Fed cut the rate by a quarter percent. How will or will that not affect rates in the coming months? And then we'll talk about what rate cuts look like in 2025.
Listen, I can only tell you what analysts are suggesting. And again, all of this is guessing. But if, you know, we hit closer to the Fed's target of 2% inflation, rates are going to come down. That's just what's going to happen. Yesterday, things went sideways because Chairman Powell said, hey, we might see higher for longer again. Remember that old, drove things crazy months ago, but now here he is using it again because they just don't know. You can look out to the future, but there's tripwires everywhere, and we got to hope we can avoid them all and not fall into a recession. But listen, rates are going to come down. They always do. We just saw a blip yesterday where we got a big spike, but rates are trending down. That's just where we're going. And I expect, in fact, in this mortgagereports.com article, they talked about Redfin had talked about interest rates being in the 6.3 range as opposed to the 6.7 and above that we've seen recently. So, yes, coming down slightly.
Yeah, they went up fast, coming down slow. We'll see what happens in 2025. Now he's kind of said, or the sentiment is maybe we just kind of peel that back to two rate cuts. I think it's too early to tell, Rich. Obviously, like we've been talking about this every month for the last 6 months, like how often, how fast, how steep are these rate cuts going to happen? I guess it's important for analysts to have some sort of number like that. But what are your thoughts on cuts for 2025?
I no longer have thoughts on it because really, honestly, the Fed can change gears anytime.
Yeah.
It's going to take two bad labor reports to come out, and all of a sudden we're shaving Fed fund rate. That is a guarantee. We just don't know when and if that will happen. So, otherwise we have to rely on just gradually reducing that Fed fund rate, gradually reducing the cost to borrow funds. We're just in a process, and we're in the late stages, I should say the latter stages of that process, which started 2 years ago. But, we're in the recovery mode in terms of interest rates, Michael.
Yeah, I mean, you're talking about labor. It's going to be interesting to see what happens after the holiday and some of those maybe seasonal jobs go away. If the government shuts down
Government
and
jobs.
government
I
jobs
mean,
go away
if
and some of the
Elon
stuff is
Musk
cut, yeah,
makes some
that could
changes,
make a big difference, and we would see what happens. So
yeah, we
labor
will.
labor could be a big problem in the coming months, but I think there's some short term pain that might need to be felt to kind of level things out there. So,
Yeah.
Rich, no one wants to hear those things, but I think what you said at the beginning was that rates trending down, right? And so we're moving in that direction slowly. There's hope in the marketplace. 2025, I know you feel great about it. I know I feel pretty optimistic as well. Part of that comes from just the fact that we are at a great company that has survived everything that the economy's thrown at us over the last 30 years. Rich, talk to me a little bit about network funding, what we're doing right now, and how we're training our people to succeed in 2025.
Yeah, we're just making sure our people are educated on everything that's available to all the home buyers in the market today. Well, as long as I know that, as long as they can educate a home buyer, aside from the interest rates, assuming they're going to qualify with whatever the interest rate is today, like give them some feel goods about products and, different prices that are available today, and give them the opportunity to, put some tools in their toolbox to go out and negotiate for a house today. Because today is a better day for a buyer to negotiate, right? Interest rates drop, all those negotiation powers go away because you have more buyers making offers on one particular property. That seller's not likely to negotiate. Well, today is a different day. You can negotiate the price, which is the permanent piece of a home buy. When buying a home, the purchase price is permanent. The interest rate is temporary. You're going to have that interest rate for maybe 12 to 18 months unless rates considerably come down. But your purchase price is permanent. So make sure that you're ready, just like our guys are ready to educate you as a buyer on what's available for you to use to purchase this next home.
That's right. Our guys and gals are ready for 2025. And if you're interested in looking at a new home for your business in 2025 and you're a mortgage loan officer, check out the Grow link below. We'll get you all the information that you need to know about being part of the best network in mortgages. Rich, we ran a little long today because there was so much to talk about, but also because I'm going to miss talking to you. This is our last episode of the year. We're going to take a break for Christmas and New Year's. And so, Rich, I want to wish you a Merry Christmas and a Happy New Year. And everyone out there watching and listening, the same. Merry Christmas, Happy New Year. We're looking forward to 2025. We'll see you then. JM Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.